Well, Dan, I think importantly, we've seen very strong market conditions. And we actually shipped 189 million tonnes of iron ore in our financial year 22 that we've just reported. So that was an increase year on year. So in terms of shipments, we've actually seen outstanding operational performance. Now, we've also seen strong demand from our customers. So we're continuing to see very strong demand from our customers in China. But the iron ore price did actually fall from its very high levels in FY21. And we averaged realised price of $100 a tonne for FY22, which contributed to our second highest profit in Fortescue's history of $6.2 billion. So it was entirely market driven, and the iron ore price is a key determinant of our revenue. But in terms of operational performance, we actually saw increased shipments. So we've delivered very strong results for our customers and also for our shareholders. And you mentioned our dividend. We declared a final dividend of $1.21 Aussie per share. And combined with our interim dividend of 86 cents, that's a total dividend of $2.07, or 6.4 billion Australian dollars in distributions to our shareholders, and that's a payout ratio of 75% of net profit after tax. So entirely consistent with the iron ore market, with the prices we saw in the market, but in fact we exceeded guidance in our shipments by the top end of that range at 189 million tonnes.
So Elizabeth, higher shipments but lower iron ore prices. How do you expect this dynamic to play out moving forward? Because we've seen prices more than halving from the highs of May's last year. Do you think this weaker price environment is transitory, or is it here to stay, perhaps longer term? And to a second point, how concerned are you by the deteriorating growth outlook that we're seeing in China now, something that both BHP and Rio have flagged as key concerns moving forward?
Well, in terms of the outlook for the iron ore price, I mean, it is cyclical, and we saw a different iron ore price environment in 2018. We've continued to focus on the things that we can control, which is providing iron ore to our customers, keeping our costs very low, which we have done year on year, and we've generated very strong margins. So there's been an enormous amount of value that's been delivered to our shareholders over the last 3 or 4 years. As I said, the market is cyclical, is generally determined by the outlook for steel production in China, is one of the key determinants of that Platts 62 index price. And we saw China last year produce just over 1 billion tonnes of crude steel. We think China's probably on track to produce a similar amount of crude steel in this calendar year. So market conditions are very stable. There's no major new supply coming into the market. In fact, the only major iron ore growth project globally is our Iron Bridge magnetite project. So we're looking forward to first ore for Iron Bridge in the first quarter of next calendar year, and that'll grow our overall iron ore operations by another 22 million tonnes per annum. So we certainly have, our focus is on supplying to a market where we know there is significant demand, particularly for that high-grade magnetite concentrate.